The U.S. President Donald Trump ordered a total and complete blockade of all sanctioned oil tankers entering and leaving Venezuela. Let's get more from Bob McNally, founder, president of Rapidan Energy Group. Thanks for joining us today.
Great to be with you, Marilla.
Do you anticipate a regime change in Venezuela?
I do. Rapidan has put 70% odds that in the coming weeks to months, Mr. Maduro will leave one way or the other. President Trump has the means, and it is increasingly clear the will to see through regime change in Venezuela. And we think odds favor, not a certainty, but odds favor that outcome.
Okay, we had West Texas Intermediate hit a new low yesterday, under $55 at one point. It's moved back a little bit today, but how much of a difference will a blockade on oil from Venezuela affect the supply in the market?
Not by much, Marilla. You know, in some ways, the president's Truth Social announcement of a complete and total blockade on sanctioned tankers is really just restating what's already been in place since the United States seized the Skipper, a sanctioned tanker, a while back. Since then, we've known for days now that sanctioned oil tankers, which aren't all of oil tankers, are not welcome and are vulnerable to being seized. So by saying sanctioned, the president indicated he's not going further than we have already. But you know what? Even if the president declared a total blockade and we lost all of Venezuela's roughly 800,000 to 900,000 barrels a day of exports, that's pretty small in the bigger picture. And as you mentioned, oil prices have been falling because traders are expecting this oversupply to materialize at the range of 2 to 3 million barrels a day. In that environment, the loss of Venezuela, it's important for China, which has made a lot of money buying Venezuelan barrels at a discount. So it's not a good day for China, but for the broader oil market, for consumers, for oil prices, even the total loss of Venezuela wouldn't be catastrophic.
Okay, so China could easily make that up somewhere else?
Yes, China could go to the Middle East and say, look, I lost my Venezuelan heavy sour barrels. I'd like some more from you, Iraq, UAE, and so forth. There are other customers. Venezuela accounts for about 4 to 5% of China's total crude imports, and it can replace them pretty easily.
Okay, so what about the possibility of an agreement between Russia and Ukraine to sort out that conflict? How does that Russian oil change the outlook for the world?
You know, it's a big difference as to whether we get a ceasefire, like in the end of the Korean War, in which case we wouldn't expect sanctions to be removed. Russian natural gas would not flow back to Europe. Those sanctions on Russian exports of oil and refined products wouldn't really end. Or a peace agreement. That would be ideal, where we have a true settlement like after World War II. I think a peace agreement is unlikely. The sides are very far apart. What's really on the table is an armistice. And in that environment, I don't think too much changes on the energy front. We won't see a relaxation of sanctions, certainly that the EU has, as long as there's just sort of a cold peace or an armistice where both sides are fully armed, staring at each other over an armistice line. Not fully at war, but not at peace. No big change.
So what would your price target be for West Texas and Brent crude for the start of 2026, considering how many factors are sort of affecting the oil market right now?
We're looking into the high 50s dollar per barrel range. For Brent, we're looking at a low of around 55. That means for WTI, $52, $51 per barrel. And that assumes, very importantly, that there are cuts in production, because this market is oversupplied, we believe. We believe that either OPEC Plus, led by Saudi Arabia, will have to implement production cuts. So far, they've been increasing production, although they paused now. Or President Trump will start to tighten sanctions on Russia, Iran, or Venezuela to remove oil. If we do not see oil removed, either from OPEC Plus or from sanctions, then my price target would go lower for crude. We will have to go to levels that start to hurt U.S. shale oil producers.
And what level is that?
Well, that level starts in the $35, $40 range for some of the shale plays. We get down into there, and you'll start to see shale wells shut in. Not just new rigs get postponed, but actual production start to slow down. You know, in 2020, oil prices went to $20 a barrel, and we lost the United States over 2 million barrels a day pretty fast in a few months then.
All right. Bob McNally, I got to leave it there, so I'm out of time with you, but thank you for your time. I appreciate it.